Today we are going to discuss exercise number 8, page number 114. From the following balance sheet of Subha and Sudha, who share profit and losses in the ratio of 2:3. Calculate interest on capital at 5% per annum for the year ending 31st December 2018. Balance sheet as on 31st December 2018. Closing statement of information is given. Capital Subha 40, Sudha 60,000, total 1 lakh. Current liabilities 20,000. Fixed asset 70,000, current asset 50,000, total 1 lakh 20, 1 lakh 20. Drawings of Subha and Sudha during the year were 8,000 and 10,000 respectively. Profit earned during the year was 30,000. So with this information now we are going to calculate interest on capital. See, generally interest on capital is calculated capital in the beginning. But in this problem, now capital at the end alone is given. We are going to find out the capital in the beginning with the help of calculate missing figure statement. Then see the exercise. Closing capital 40,000. Sudha 60,000. Add drawings 8,000. 10,000. Now 48,000, 70,000. Less profit already credited 12,000, 18,000. How to divide this profit? According to ratio 2:3. Total profit 30,000. This 30,000 is divided by Subha and Sudha 2:3. So 12,000, 18,000. It should be subtracted from the adjusted closing capital. Now we get a capital in the beginning. Now we are going to calculate interest on capital for 36,000 and 52,000. See, interest on Subha's capital 36,000 into 5 by 100 into 5 by 100. So 1,800 for 1 year. Interest on Sudha's capital 52,000 opening capital 5% per year. So interest on capital 2,600. This is the format for calculation of opening capital. Then only we are going to find out the answer. Are you clear? Then come to exercise number 9. From the following balance sheet of Rajan and Devan, who share profit and losses 2:1. Calculate interest on capital at 6% per annum for the year ending 31st December 2018. Balance sheet as on 31st December 2018. Capital account Rajan 1 lakh, Devan 80,000, 1 lakh 80,000. Then profit and loss appropriation 40,000. Sundry assets 2 lakh 20,000. Both side total 2 lakh 20,000. Then on 1st April 2018, Rajan introduced additional capital 40,000. And on 1st September 2018, Devan introduced additional capital 30,000. Drawings of Rajan and Devan during the year were 20,000 and 10,000 respectively. Profit earned during the year was 70,000. With this information, we are going to calculate interest on capital from the opening. See, in this problem, closing capital is available. With the help of calculate missing figure information, now we are going to find out the capital in the beginning. Okay. Then see the answer. Capital at the end, Rajan 1 lakh, Devan 80,000. Drawings of the partner during the year. See, 20,000 Rajan, 10,000 Devan. It should be added along with the closing capital. 1,20,000, 90,000. Then additional capital introduced by Rajan and Devan 40,000, 30,000. It should be subtracted from the adjusted closing capital. Now we get 80,000, 60,000. From these capital, now we distribute the profit 30,000 to be appear in the see in the problem profit earned during the year 70,000. But 40,000 to be shown on the profit and loss appropriation account. Okay, 40,000 to be shown on the profit and loss appropriation account. It should be subtracted from profit earned during the year. 70,000 minus 40,000. 70,000 minus 40,000. Because profit and loss appropriation account is adjusted, so it should be subtracted from profit earned during the year 70,000. So actual profit for this year 30,000. It should be divided according to the ratio 2:1. It should be subtracted from adjusted closing capital 80,000 minus 20,000. Now 60,000 is the opening capital and 50,000 is the opening capital. Then only we are going to calculate interest on capital due to Rajan. 60,000 into 6 by 100 for 1 year, 3,600. Then additional capital introduced by Rajan 40,000. On which date? On 1st April. From April to December, how many months? 9 months. Okay, 40,000 into 6 by 100 into 9 by 12. So 1,800. So total interest on capital due to Rajan 5,400. Then interest on Devan's capital. Opening capital 50,000. Okay, 50,000 into 6 by 100 for 1 year, 3,000. Then additional capital introduced by Devan 30,000. On which date they introduced additional capital? On 1st September. From September to December. September, October, November, December. 4 months. So 30,000 into 6 by 100 into 4 by 12. Now we get 600. So total interest on capital due to Devan 3,600. Okay. Then exercise number 10. Ahmad and Basir contribute 60,000 and 40,000 respectively as capital. Their respective share of profit is 2:1 and the profit before interest on capital for the year is 5,000. Compute the amount of interest on capital each of the following situation. First one, if the partnership deed is silent as to the interest on capital, if the interest on capital 4% is allowed as a partnership deed, if the partnership deed allows interest on capital 6%. As per this question, first one, if the partnership deed is silent as to the interest on capital, no interest on capital is allowed to partners' contribution. Answer first one, no interest on capital is allowed to partners' contribution. See the answer, no interest on capital is, no interest on capital will be allowed. Then question number 2. If the interest on capital 4% is allowed as per the partnership deed, 4% on 60,000 due to Ahmad 2,400 and interest on capital due to Basir 40,000 into 4 by 100, 1,600. Now we are going to add these two interests. How much? Now 4,000. 2,400 plus 1,600. 4,000. Now total profit available 5,000. So since there is sufficient profit, interest on capital will be provided. See, total interest 4,000. Profit is available 5,000. So sufficient profit is there. So interest on capital will be allowed. Then question number 3. If the partnership deed allows interest on capital at 6%, then we are going to calculate interest on capital due to Ahmad. 60,000 into 6 by 100. 3,600. And interest on capital due to Basir. 40,000 into 6 by 100. 2,400. So total interest on capital 3,600 plus 2,400, 6,000. But profit available 5,000. How the interest on capital will be provided? Since there is insufficient profit, interest on capital will not be provided. Since there is insufficient, because the profit is 5,000, interest on capital is 6,000. It is not possible to claim interest on capital from the profit because insufficient profit. Interest on capital will not be provided. Next, we are going to discuss interest on drawings. Interest is charged on drawings made by the partners only when there is an agreement among the partners in this regard. See, whatever ratio mentioned in the agreement, that ratio to be followed or that charge to be followed for claim interest on drawings from the partner. The rate of interest on drawings will be rate agreed by the partners. The following are the journal entry to be made in the books of the partnership firm. See, for charging interest on drawings, adjusting entry. For charging interest on drawings, adjusting entry. Partners capital account, that is if fluctuating capital. Partners current account, that is if fixed capital. Okay, partners capital account or current account debtor to interest on drawings account, because interest on drawings is income, it should be credited. Why partners capital account is debited? It should be subtracted from the capital. Automatically the capital will reduce. If capital reduce, it give equal debit to the respective partners capital account or current account. Okay, now partners capital account or current account debtor to interest on drawings account. Interest on drawings is due from the partners to the firm, and hence partners capital or current account is debited and interest on drawings account is credited. See, interest on drawings account is income. See, all incomes and gains are credited as per nominal account rule. Okay, then for closing of interest on drawings, see, interest on drawings is credited. It should be closed by the way of giving equal debit. Then it should be transferred to profit and loss account because it should be treated as income to the business. So interest on drawings account debtor to profit and loss appropriation account. Okay, interest on drawings account is credited in adjusting entry. It should be closed by the way of giving equal debit. Then interest on drawings is income, so it should be transferred to credit side of profit and loss account appropriation. Then these are all adjusting entry and the closing entry. Then calculation of interest on drawings. Interest on drawings can be computed by the following: either direct method or product method. Two methods we are going to use to find out the interest on drawings. One is direct method, another one product method. Also, if the partners withdraw fixed amount and fixed time interval, interest on drawings may be calculated on the basis of average period. For example, every partner has withdraw 1,000 rupees per month, beginning of every month. Some of the partners can withdraw middle of every month, fixed amount, 1,000. Some of the partners can withdraw end of every month, 1,000. Okay, so the amount is fixed, date of drawings also fixed. Also, if the partners withdraw fixed amount at the fixed time interval, that is interest on drawings may be calculated on the basis of average period. Based on the date of drawings and the amount of drawings, different methods can be followed for calculating interest on drawings. First one, direct method. See, interest is calculated on drawings for the period from the date of drawings to the date of closing date of accounting year. See, in this method, date of drawings and date of accounting closing the year, these 2 points are considered. The following formula is used to compute the interest on drawings. Interest on drawings is equal to amount of drawings into rate of interest into period of interest. Period of interest means how many months. Okay, a period of interest refers to the period from the date of drawings to the closing date of the accounting year, on which date partner withdraw from the business. Okay, from that date onwards at the end of the year. This method is suitable when different amount are withdrawn at different time intervals. Different amount withdraw and different time interval. That method is used for direct method. See the illustration number 11. Valen is a partner who withdraw 20,000 on 1st April 2018. Interest on drawings is charged at 10% per annum. Calculate interest on drawings on 31st December and the past journal entry assuming fluctuating capital method. See, in this problem, we consider on which date Valen withdraw from the business. That is 1st April. Accounts are closed 31st December. These 2 months are taken into account. From April to December, how many months? 9 months. Now we apply the formula. Interest on drawings is equal to amount of drawings into rate of interest in the period. How much amount withdraw from the business? 20,000. On which date? That is April. April to December, how many months? 9 months. Rate of interest 10%. So 20,000 into 10 by 100 into 9 by 12, 1,500. Now what is the journal entry? See, under fluctuating capital method, anything is transferred to partner's capital account. Now Valen's capital account debtor to interest on drawings account. Now interest on drawings is closed by way of giving equal debit. So interest on drawings account debtor, that the interest on drawings is transferred to profit and loss account because it should be treated as income. As per nominal account rule, all incomes and gains are credited. So profit and loss appropriation account is credited. Then illustration number 12. Arun is a partner in a partnership firm. As per the partnership deed, interest on drawings is charged at 12% per annum. During the year ended 31st December, he draw as follows. Arun withdraw on 1st March 6,000, on 1st June 4,000, on 1st September 5,000, on 1st December 2,000. So different date, different amount are withdraw by Arun from the business. Then how to calculate the interest on drawings? See the solution. The formula: amount of drawings and rate of interest into period. See, first withdrawal on March 1st. First withdrawal on March 1st. Amount is 6,000. 6,000. 6,000 into 12%. 12 by 100 into 10 months. See, accounts are closed 31st December every year. From March to December, how many months? From March beginning. March 1, June 1, September 1, October 1. March beginning, how many months? March to December, 10 months. So 6,000 into 12 by 100 into 10 by 12, 600. And again, Arun withdraw on June 1st, 4,000. 4,000 into 12 by 100 into from June 1st to 31st December. June to December, 7 months. 7 by 12. Amount of interest on drawings 280. Then withdrawal on September 1st, 5,000. 12 by 100. September to December, 4 months, 200. And withdrawal of December 1st, 2,000 into 12 by 100 into 1. Because beginning of December, 1 month we are claim interest from the partners, 20. Total interest on drawings, 1,100. Are you clear? See, date of drawing is important. Okay, on which date, whether the amount is withdrawn beginning or end, it should be considered. Okay, are you clear? Regarding this illustration number 11 and 12, regarding this problem, you have any doubt, you ask later. Now today class is over. We will meet later. Thank you.